Hello and welcome to another update video about Ethereum. So my friends, nothing or not much changed. We're just progressing in this triangle pattern here. Could be a triangle, yeah, could be something different. I highlighted to you in the previous video. Don't be too confused or don't put too much brain power into the lower degree wave counts here. It just doesn't really help, and often these break anyway. However, we can make an attempt in this video because I want to, I try to keep you entertained, right? Also, it gives you an idea of the levels to watch. So obviously nothing changed looking at the bigger picture. But what I wanted to emphasize here is again the idea that we, from this off these lows on last Monday, we moved up in a 1-2 setup. This was probably a rally in a third wave. We might have done already the fourth wave down, and we could now be starting that fifth wave to the upside. At least that is one interpretation. Whatever interpretation here on the micro count you get, there are different possibilities to count this. Important is that we're holding the low that we made on Friday, which is 1630. Okay, if we break below that, it will indicate that we're also going to break 1620, which is the Fibonacci support. And if we break below that, we will probably retest the lows of last Monday. So this is sort of all you need to know. And if we get the breakout to the upside done from here, which is still my preference, so one more wave up is my preference. If we do that, then it could take us into the 1800 range, maybe a bit higher, 1900. Now, first of all, we can see here that we've got this sort of inverse head and shoulders on the chart. Yeah, this is getting quite evident now, but this doesn't mean it needs to break out, okay? But it's still something to watch out for. Then we've got here a sideways consolidation, which often happens in a wave 4. That's why I've got a wave 4 down here with a low at 1650. So let's see. We're going to zoom in, try to make some sense of the micro counting here. And if it just helps for educational purposes, how to label those waves, that might help. So there's a few possibilities how to label this. I'm only going to show you one here on the micro level because there's no point putting too much brain power into micro counting. They often get invalidated, they are very fragile, and sometimes you see all sorts of funny stuff on the lower degree wave structures and patterns, okay? But either way, that's why it's so important, especially in a corrective structure, and this is corrective. It's not impulsive yet, at least not clearly impulsive. We are still in a range. To be flexible in a corrective structure, it means maybe be a bit more careful with your trades, or take a bit of risk off, or just wait for a clear pattern. You know, you don't need to trade every wave. What you need to know when you're in a corrective wave structure, be aware that possibly another impulse is going to follow, and you are facing headwinds if you try to trade a correction. Okay, this is sideways correction at the moment. Now, okay, what could be a possibility? I've labeled it in a way that we said we bottomed here in a wave 4. This was 1630 on Friday. We rallied in a 5-wave move, completed this 5th wave of the higher degree third, came down in a correction in a 4th wave, the higher degree 4th, and could now be working on the 5th wave to the upside. This is speculation at this stage, but it's a possibility. And I just want to show you how you can label the waves accordingly, because we don't want to break any rules. But off this 1630 low, we can count a wave 1 to the upside and a wave 2 to the downside. A, B, C in a flat pattern. Then a wave 3 to the upside here, which peaked at 1723. A wave 4 to the downside, and a wave 5 to the upside. And I'm going to maybe change the color here so that just that you see the difference in color, and I'm going to zoom in a little bit. So if you think about that, looks quite messy. Yeah, it does. It's a correction, or at least not the cleanest impulse. Yeah, I mean, this is impulsive. At least you can get away with counting it like that. But overall, the entire move I call correction because we haven't really broken out of the range. And it could easily be something different, yeah? I mean, this could be some kind of an Elliott Wave triangle as well. But we had a possible wave 1 to the upside here, a wave 2, a wave 3 rally. Then here a triangle in a wave 4. As a possible A, B, C, D, E in a 4th wave, often a triangle, and then a rally in a 5th. So that's sort of the possibility we've got here. I take those numbers out again because it's pointless to try to, really, it gives you the false impression this is definitely what's going to happen and what happened. We need to be flexible here, but wave 4 down, okay, could be finished. Against the low of 1653, we could now focus on higher. And this could be a first wave 1 to the upside. Yeah, we have a small 5-wave move here. It's not the clearest. Bitcoin is a bit clearer, but that's why I consider it for Ethereum as well, that we have 5 waves to the upside here in this wave 1, then possibly a wave 2 down, all bought up again. If we now break above the wave 1 high at 1720, it would indicate a possible breakout for a third wave of that last wave up, the 5th. Okay, so because I have a possible 5-wave up on Ethereum, but more clearly on Bitcoin, we need to be watching if the next move up could lead to a breakout. But again, at the moment we are still in this larger pattern, as you can see, and it's a bit boring, but therefore we did a bit of micro counting. Hope it was at least educational. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.